All right, welcome to The Report. I'm here with Michael Nadeau from the DeFi Report. I'm stepping in for Ryan Sean Adams, who is on vacation this week. He will be back next week. But Mike, I am glad that I'm here for this one this week because there is some action in the markets to talk about. And you're the guy that I want to talk to.
There is definitely some action in the markets. You picked a good week to step in here, David. And, before we just hopped on, I said, this is like the most fascinating time in the markets I've ever seen in terms of just the dispersion in the market. I think, that was really the second capitulation we've seen from Bitcoin in this bear market yesterday. And there's other assets that are rising in this environment. We had 3 assets in our portfolio that were up significantly yesterday. This is something I've never seen. It's making this bear market really, really challenging for investors. And I think in some ways less painful for some investors, but also potentially more painful for others that maybe aren't catching some of these other assets that are rising in this environment. So a lot to get through. I know everyone's wondering if we've bottomed and kind of what the outlook looks like here. So we've got a lot of data to get through. Excited to get into it.
That is exactly what I am wondering. We're going to slow roll our way there. Yep. Let's talk about the cycle. The typical way that this plays out for the last 2 or 3 cycles, however long I've been in crypto, is that everything in crypto pukes. Bitcoin pukes the least, Ether pukes a little bit more, and then everything is just down so bad. And then people leave, and then you wait a little bit more, and then you start to see some tokens go up and make some moves in the bear market, secretly, silently, under everyone's noses because 95% of people left. Before Bitcoin recovers, before Ether recovers, some tokens move.
Yeah.
What is happening now is Bitcoin is on its way down. The cycle appears to be cycling. We are seemingly, maybe we're kind of, if you look at the Bitcoin chart, we're at 66,000. We've been there somewhat recently. We were there in April. We were there in February. Yep. So maybe we're still at the bottoms. Maybe we go down more. I don't know. But it's so early in the bear process to see other tokens down market breaking all-time highs aggressively. And I think that's what you're talking about is this is different.
Yes, clearly things like breaking out, like just looking at what Lighter's been doing over the last few weeks. Obviously what Hyperliquid has been doing, what Zcash has been doing, what Near and some other AI adjacent coins like BVV. So this is different. I've never seen this.
Here's the Lighter chart. The Bitcoin chart is nowhere near anywhere expressed here. You would never tell that Bitcoin is going down by looking at the hype chart. And you could do the same thing with Near, right? As you just said, it's Bitcoin going down is not showing up in this chart.
Right. And I think, there's 2 ways to interpret this. I think one is that the crypto markets are maturing and things that have clear fundamentals, that have the right narratives, that are in the right sectors, are just outperforming. And investors are just becoming a little more sophisticated that there's other stuff and it's not just a kind of rising tide, rises all boats. So that's one way to think of it. The other way is these areas that are outperforming, these areas of the market are sort of just still drunk or something, and they haven't gotten the memo that the tide is going out and it's going to pull everything down. And that's kind of how I'm trying to think about this. There are also other sectors of the crypto markets that we've been writing about that we've actually been making some investments in that have actually been in a deep bear market for 12 to 18 months or so. So there's all kinds of stuff going on out there. And I think the challenge, if you're an investor, and I think it's almost been too easy in past bear markets where you could sort of anchor to this idea that most of the space is going to bottom after Bitcoin, hits its macro low. And that was kind of our view coming into this bear market. And I certainly evolved the thinking on this. I think there are assets that have actually already bottomed, even if Bitcoin actually goes to a lower low. And of course, we're seeing just stuff like Hype and Zcash. We will see if that ultimately kind of recedes and the tide comes out on these assets. I don't have a really, really strong view on this just yet. We can kind of get to kind of portfolio management later. But just really, really fascinating markets right now.
So let's just go back and set some context here. Mike, I remember the last time we did this, it was 4 weeks ago.
Yep.
I think you had just sold Bitcoin right into the Iran war, something around $73,000.
A little less than that.
A little less?
Yep.
Okay.
Yep.
72,
yep.
call it.
Yep.
And, Bitcoin then ripped up to 82,000. And like, I was kind of bullish. I was like, man, like, despite the war, things are going up. Like, what, Mike, what's going on? What did you do? And then here we are at 66,000. So you went from a little wrong to a little right. I'm not going to say that you are super right. I think in order for you to be super right, we actually need Bitcoin to like have another leg down. It kind of has just capitulated all of its progress that it's made since February, but it hasn't gotten any lower than February, and it's starting to run up against the 200 week moving average. So the 200 week moving average is coming at 61,800 today. It'll be a little bit higher tomorrow, and Bitcoin is at 66,000. What do you think Bitcoin does with regards to the 200-week moving average? Do you think it bounces off it? Do you think it goes below it? What are your thoughts there?
Yeah. Just to come back to that sell, I think I'm chalking that up as a mistake, to be honest.
Oh, really? Okay.
When I made that sell, I didn't lose money on it, and I actually kind of basically repurchased that yesterday. But I do think, I sort of was offsides on the market for a brief period there. But fortunately, we kind of stuck to what the data was saying. Things did roll over. And for me to be really right, like you said, we need to kind of go into like potentially these deep value zones. And I think deep value is basically below this 200-week moving average, which I think it's at 61.7 or
61.8. Yeah.
61.8. So that is rising, right? As time goes, it's a moving average. And in the last cycle, we dropped 30% below the 200 week moving average. And so this can certainly happen. And the fact that we're there, we're getting close to it right now. What I'm trying to think through here is just like how much, we can get into market structure. We got some market structure data in the report today. We can get into that. And then we also need to start to think about what's going on with strategy and just potential for like confidence starting to, erode further. And that to me is the key thing here. This is a confidence game. Bitcoin is a mimetic asset. When confidence leaves, it can be reflexive. And MicroStrategy has played a role in creating reflexivity to the upside for the most part for this asset. But we have a chance of seeing it go in the wrong direction here. So we're going to get into some of that. But I think anytime, historically, if you're buying near the 200-week moving average, that has historically been a fantastic entry zone.
If you have the time to wait. And as you said, it seems like we're in value territory.
Yes.
But we're looking for deep value. And I think as it stands for this week, deep value is, whether or not we get to deep value is determined by whoever can answer the question, is MicroStrategy going to mimetically unwind as much as it's mimetically wound up? Like, is Saylor going to reestablish confidence, or is there weakness here? I want to pull open the stretch chart, but first we've got to talk to our friends and sponsors over at Galaxy. This one is for the institutions, whether you're looking at the future finance or also just a backbone for the next industrial revolution. Galaxy is a name that you need to know. They've established themselves as a global leader, not just in digital assets, but also in critical data center infrastructure powering AI. What's unique about Galaxy is how they bridge these two worlds. They are both a full stack platform for digital finance, including institutional trading, custody, tokenization, but they're also building the next generation industrial revolution. So we've got AI and HPC ready data centers, including their Helios site, with 1.6 gigawatts of approved power on the AI side. And as a publicly traded company, they are bringing leadership to a next level with transparency and durability that is rare in the crypto space. So if you want to see how Galaxy helps institutions invest, build, and transform, go check them out. There is a link in the show notes, bankless.cc/Galaxy. All right, Michael, I'm bringing up the STRC chart. Now, just for some context, STRC is MicroStrategies dividend paying equity yield instrument, pays 11.5%, crazy good yield. It's supposed to trade at 100. If it trades above 100, Strategy is allowed to issue more stretch. If it trades below, in theory, the market's supposed to bid it up, or Strategy itself will bid it up. But anytime it trades too far away from $100 is a dislocation that we need to look at. It has been dislocated in the past a few times. Back in November, it traded all the way down to $90. Back in February, it traded down to $93. Both times it resumed trading at 100. With the weakness in Bitcoin and also the weakness in MSTR and also the loss of confidence from the fact that Strategy just sold 32 Bitcoin, a small amount of Bitcoin, but a symbolically large statement, Stretch is now trading at $95, so 5% off of all-time highs. I will say that even though this number, 5% off, is lesser than the instances of when Stretch has traded off $100 in the past, Stretch is bigger now. There's a larger market cap. They have issued plenty of Stretch, so the liability is larger. So Michael, tell me what you're watching here for just signal in terms of alpha with Bitcoin price.
Yeah. So, that the red line going down there, the way I sort of think about that is like, that is basically Stretch holders saying we need more yield. We don't think the 11.5% is compensating for the risk. We're feeling nervous about this situation with your cash position, with the price of Bitcoin, the confidence in the market, and we're starting to worry that we're not going to get paid. And so for him to draw in more investors, that yield needs to come up. I think if that thing comes down to like 80 or so, that's when it starts to look more like a credit event. But I think this whole sort of loop that strategy, we've talked about this before on the show. It's kind of like an impressive thing. And it's almost too good to be true when there is confidence in Bitcoin, the asset, that he's able to just go into the market and raise capital, go out and buy Bitcoin. And then Bitcoin just goes up in price. And then he's able to pay dividends
do it again,
and then raise more
motion.
equity and pay dividends. And people and the dividend holders are like, oh my God, I'm getting 11.5% on cash. Like, it's like too good to be true. And there's a lot of reflexivity baked into that. And it's really based on confidence in that whole in Bitcoin. And for the first time, we're seeing this, come under fire here. And I think the way that I'm thinking about it is he's in a pickle. I think this is an example of like probably just going a little too far with this ability to raise capital. This, if we go back a few months, this was the bull case for Bitcoin at the time, and people were saying we had already bought on because Saylor was in the market and buying, and so. That is completely reversed. Back in 2022, we didn't have these preferred equity, parts of the capital stack. It was just, really the MSTR holders and then the debt that they have on their books. What's happening now is he's in a spot where he actually has to take from his MSTR holders one part of the capital stack. That's when he sells Bitcoin, and I know it's only 32 Bitcoin that he sold. When he sells that, he's reducing Bitcoin per share for MSTR holders, and then he's giving it to STRC holders as dividend payments. So the question for me here is, and I'm sure that the war room over at Strategy is going right now, and they're trying to figure out, because a lot of this is about signaling to the market and how things are going to shake out. I think the reason they did the 32 Bitcoin was kind of to just put it out so that it's out there and the market
needs to digest it.
Yeah. Because if they came right out and did $1 billion or whatever, then that could just kick off like a bank run type of dynamics. And so I think that's sort of what they're doing. What is unclear is, how much Bitcoin could they have to sell, and that. I think really a lot of that depends on what that chart does. Like if that chart just comes back up to par with 100, it's telling you people are not as nervous as maybe we think, and people still like that yield, and there's maybe demand for that, and then he can go in and issue more of it, and then maybe Bitcoin recovers, and like people forget about this pretty quickly. The bear case, I think, is that does not come back as quickly as we hope, and it just starts to force him to, then he has to come out and say, hey, I have to sell some more Bitcoin. And then what happens? Does that red line start going down more when that happens? And like, what does this potential doom loop look like?
Yeah, and the problem with this is like Saylor's moves are so telegraphed because he has reduced optionality here. So if Stretch goes down even more, if it gets to a scary number, like below 90, it's signaling to the market and everyone else who's holding Bitcoin. It's like, like Saylor, the largest holder of Bitcoin, has to sell Bitcoin. And he's going to move slower than you. And so you can hit the sell button right now and get in front of Saylor's selling because he has to finance his Stretch position, which again is just like a mimetic downward spiral that you don't really know where that ends.
Yep. That is the issue, and it's the same process on the way up, right? People are front running them on the way up. So this is the challenge. I mean, I think when I think about just the capital stack, it's not like they have they're borrowing on margin, right? So it's not like there is like a liquidation level for like their holdings or anything like that. It's more just this confidence game. And this is really just being introduced by this STRC product. So that is, this thing is, it sort of can help you at times, but it's looking like it's going to potentially hurt the markets. And I don't think anybody can predict how this is going to go. I mean, it really just depends on the conditions out there. I think the worst case scenario is, so they reported 2.1 billion in cash equivalents at the end of Q1, but then Saylor came out and paid down some of their convertible debt. So their cash position is like 871 million right now. And that's about 6 months of like kind of runway on these dividend payments. So I think he's trying to get ahead of it, sell some Bitcoin, shore up 2 years worth of dividend payments, something like that. And maybe this can start to go away. If he's unable to do this and he has to just keep selling to kind of calm the markets and get that STR chart back to 100, I think it could look like potentially 2 to 3% of his holdings, which is significant. And it's probably enough to really spook the markets. And I think, we talked at the intro, like, where are we going? Have we bottomed? To me, this is the scenario where you go to these deep value zones.
The difference of buying a little bit of value while there's a potential precipice of a mimetic unwind. I don't know. There's like a very clear case for deep value here.
Yeah. It feels that way. It does feel that way. And like the other thing I should mention that I was just thinking a little bit about last night is like, we're watching things like Zcash. Like I think Zcash is like interesting in this market right now because it seems to me, and I don't have data on it or anything, but it does seem to me that there's, pockets of crypto natives, maybe they're ETH holders, maybe they're Bitcoin holders, maybe they're Sol holders that are allocating to Zcash. And so this gets interesting if Bitcoin's having some sort of existential crisis and like OG Bitcoiners are like getting out and going to Zcash. That's interesting. That's interesting too. It's something we've never seen. Bitcoin has historically been the alpha, the king asset. It always has been. I'm not suggesting that that's going to change, but something to, kind of entertain that, like, if it gets really bad, then that's kind of the type of setup here where there's competition in the market as well. Yeah. So.
Yeah, and that's not even to talk about anything about quantum, which is just like another valid other variable. And it's one thing when there's one variable, but two variables, 1 + 1 = 3 in kind of in this sense.
Yep.
And like, again, if you look at Zcash, like it's kind of got this wonky chart, but it aligns with like, let's just look at VVV, for example, like incredible momentum. Let's look at NEAR, for example. Like there are so many tokens that we can talk about in crypto that have momentum for all of 2026.
Yeah.
What's another one? Hype is like the biggest example so far. Just like the momentum of Hype is insane. It is up 150% since February.
Yeah.
And like we were saying earlier, the fact that Bitcoin, the majors are down is just not showing up. And so you have majors with momentum downwards and you have other tokens with momentum upwards. And it seems like this momentum has longevity to me.
It feels like it right now. It feels like it right now.
Now. Maybe that's the top. Who knows? I think, you can never know.
Yeah. And I tend to, I'm kind of a contrarian and I always I'm typically more comfortable going against the crowd. And there has become this sort of narrative, or I would say just general view out there coming from a lot of like bigger accounts on X and stuff, that this is like a 4-asset market and everything's consolidating around basically the charts that you just showed there. That looks frothy. I've been looking hard at Zcash and trying to figure out, is it a speculative thing right now? Is this just
I'm certain it is a speculative thing right now.
Well, I think it's both. I think you have, like, if you look at open interest and you just look at kind of what you would see from like a really kind of like hot ball of money type situation, like you're seeing that there. But I also think you're seeing like the shielded Zcash supply rising, and you're seeing like there's definitely some like just spot buying, and if people are coming over from other assets, that's probably long-term capital, I would think. So I think it's a little bit of both, and this is something I'm kind of watching pretty closely, because there is a world, like in the world that you're bringing forth here, where Bitcoin just stays weak, these other things actually just kind of don't roll over. Where Zcash actually breaks out, right? It's kind of made multiple attempts to get up to all-time highs. If it breaks out, that's a breakout from like a decade-long sort of level there. So something to keep an eye on, and something I'm watching pretty closely.
Certainly.
Yep.
Let's talk about Bitcoin outflows, because this is just another thing that's kind of just adding on to the pile. It's just like Bitcoin it's getting dogpiled by things left and right. If you just look at the Bitcoin outflows since the 15th of May, every single day there is somewhere between like 100 and I think the highest one on this page is $700 million of outflows daily. And so like over the course of the last like 15 days, it looks like something like $3, maybe $4 billion of outflows. Not a single green day. What's going on here?
Yeah, it's not looking good. This is if you just go back 2 months or so, it was sailors buying and the ETF holders are diamond handed. There's no sellers. Bitcoin's already bottomed for the cycle. This is, fully reversed. And yeah, the flows are now net negative for 2026. And still, I would say holding up fairly well. The total AUM in Bitcoin is down about 5.6% from the peak in last October. So it's still holding up well. It's really just the momentum that we're seeing right now. And I think there's probably a couple things that are driving this. We do still have a situation on the macro side where you have rising inflation. We know inflation's really bad for Bitcoin. That's if you go back to 2022. That was a really rough year. That was a high inflation environment. The war in Iran is not settled yet. And there's a chance that, I think most people have sort of forgot about this a little bit, but there's, most of the strategic petroleum reserves that were released, some of that's coming to a head. The oil experts would tell you there's a decent chance that oil spikes up here.
Oil keeps on ranging between its highs and its lows, and it's made some ground back up. It was lows about a week ago, and now we're trading back up again. So like that is very clearly not settled.
It hasn't settled yet. And so I think there's a chance that if you're an institutional investor and, Bitcoin might be the riskiest thing, the farthest out on the risk curve in your portfolio. And if you think that we're entering an era where the inflation's rising, potentially rates are rising, you're probably going to sell that Bitcoin. So I think some of that's happening. And then I think the other piece of this is the basis trade. So a lot of hedge funds will buy the ETF products. They will then short the futures. If there's a spread on the futures, they can short that, and it's a delta neutral move, and they'll take that spread. That could be driving some of it. That's like kind of price neutral though, so it wouldn't really like impact the price. But I think that's what's driving the ETFs, and we'll see. I think again, coming back to that STRC chart, I think that is the key thing to get people to kind of calm down and maybe start coming back into the market. So yeah,
the STRC is the canary. It is not the coal mine. Wow, it's even deeper than
going down more.
Yeah, it's going down even more right now. Yikes. It's not the coal mine itself. It is the canary. And so it'll be kind of reflexive to what Bitcoin does.
Yeah.
The Bitcoin price can only be controlled by Sailor so much, but it is definitely like a very important thing to watch. There are some other assets that you talked about in the report. I don't know if we're allowed to talk about them here, but you mentioned Hood. I'd love to get your thoughts on Hood as a Hood holder. Had incredible highs a while ago, like a quarter ago, and it has just like not held momentum. What do you think about Hood right now?
Yeah, I'm a big fan of Robinhood. I'm a customer of Robinhood, and I'm a big fan of the leadership team of Robinhood. I really like founder-led companies. And I think what Robinhood has historically done really well is like deeply understand their users and build like really good products. And they're primarily catering to millennial, Gen Z audiences. And they've really leaned into crypto, which I really, really like as a sort of company vision. And if you kind of go through some of we did a report, which people can check out a few weeks ago on Hood. There's just a lot of good things happening here in terms of usage of the platform. They're actually a very lean company as well. I think this is one of the reasons that Hood has historically outperformed Coinbase. And then they're really leaning into the crypto strategy, and crypto has become a larger percentage of their revenues over the last 5 years or so. And this is something that I have like kind of a long-term view on this, and it's something I want to allocate to. We don't hold it in the portfolio right now, but it's something that I think later in, especially if this bear market continues on, I think it's going to impact Hood's share price, which will be a sort of head fake because the company as a whole is incredibly strong and has a ton of tailwinds behind it. But I think there's a chance that they report their Q2 earnings that are going to be a miss because of crypto volumes, things like that. We'll see. And it's just something I can envision a future where Robinhood is like the sort of mega financial services platform. Like once the baby boomers kind of like move off and like the younger generations
transfer the wealth,
come in.
Yeah.
So I really like what they're doing. I just like the company. I like the growth story, and I like the there's a big story to be told just with kind of transfer of wealth coming from older generations as they roll off. And I think a lot of that's going to find the Robinhood platform over time. So
yeah. I mean, this is music to my ears. I've been a long Robinhood believer. The other thing that I'll add to that is the execution speed, the shipping speed.
Yeah.
They ship stuff and they ship stuff quickly. Yep. And it's also with incredible UX, which I think also kind of meaningfully differentiates it from Coinbase.
For sure.
Mike, what are your moves this week? Or do people need to subscribe to the TDR Pro in order to get those?
Definitely subscribe, because that's where, we share all of the history, the full transparency since product launch. You can go back and see everything we've done. We've been active. So, for the first 6 months or so of this bear market, we were not doing a whole lot. We did buy back in February. We bought back in February. Now, the sort of shift that I've been dealing with internally is kind of what we were talking about at the top here, where the crypto markets, this is a stock picker's market now. It's not a rising tide, lift all boats. There's way more skill needed.
This is an alpha market, not a beta market.
Yes, where, you've got a lot of dispersion in the market. There's a lot more skill coming into play here in terms of portfolio management, a lot more artwork. You can't just be lazy and sort of assume that everything's going to bottom when Bitcoin does. And so I'm kind of like segregating the markets a little bit. So there are large swaths of the crypto markets that I believe have been in a bear market for 12 to 18 months. And I think there's a chance that some of those tokens have actually already bottomed. And what's interesting is even with the capitulation of Bitcoin yesterday, most of those are off. They're at higher lows than they were, back in April or so. So that looks interesting, and it kind of looks similar to what we saw back in June of 2022. So we had a big capitulation in June 2022. I believe this was like after BlockFi Celsius, Terra Luna. It was kind of a cascade there, and we had Bitcoin basically came back to fair value at that time. ETH bottomed right at that time. Things like Dogecoin bottomed at that time. And the bear market still went on for another 6 months, and Bitcoin actually hit a lower low, but in November after FTX went down. But a lot of other coins actually had already bottomed because the air had already been pulled out of the market. So I'm kind of like looking at that and saying that's an area that I feel comfortable allocating to for that sector. There's some interesting stuff happening in DeFi, right? When you look at Lighter, for example, we established a position in Lighter a couple of months ago. Probably should have bought more now after seeing the recent price action. One of the reasons that I got excited about Lighter is that I view Hyperliquid as like a difficult platform to onboard. I don't think it's super easy. If you're crypto native, you can do it, but I don't think it's like normie kind of like aligned. And when I went to use Lighter for the first time, just to test it out, I'm not a perps trader or anything, but just testing out the onboard process. What I realized was I had a moment that reminded me of when the first time that I used Phantom Wallet on Solana back in 2022. And it was very similar to like I was used to this clunky Ethereum L2 experience with wallets. And then you get on Phantom and like everything's like quick and snappy. There's no bridging. And I was like, wow, this feels like a real, like kind of like mainstream consumer product. That I had a similar vibe when I went on to Lighter. And I was like, this is just easier to onboard. It feels more like just easier to navigate. So, that's why I like Lighter. I think it's also an extremely important project for the Ethereum community. And I something that I'm really watching for here is to see if the Ethereum community is going to rally around this.
Yeah.
Is the Ethereum Foundation
the best proof of why ZK proofs as a layer 2 on Ethereum is important. It is the best use case we could ever imagine.
Security, they have an escape hatch. Like there's some of these technicalities, or people can check out L2Beat. But they're designing this in a way that like the accounting trail of everything that happens on Lighter will be stamped onto Ethereum. So like when we have a situation like October 10th, where if you're on Binance and you're getting liquidated, there's no trail of like what happened. You're just trusting whatever the ledger of Binance says, and you basically have no recourse. What Lighter's putting forth here is something where actually Ethereum's the accounting system for this. It's decentralized. And also you don't have to trust the Lighter team. You don't have to trust the Lighter smart contracts. And there's an escape hatch that's being built into that. People should check L2Beat again on that for the technicalities. But I just think it's kind of interesting, and it'll be interesting to see if you're an investor, like, and you're in hype. It's kind of like BTC versus Zcash or something. Like, you're up a lot on hype? Are you kind of maybe putting some in lit just in case? Like, I think that some of that could play out. So something to keep an eye on. And like I said, I'm really looking for the Ethereum community and the Ethereum Foundation to support this project and show the world that you can build these things on Ethereum. So
totally.
Yeah.
Mike, as the week progresses, what signals are you looking for? You're clearly looking at Stretch as the canary for Bitcoin. What other signals are you looking at?
So that's kind of the thing I'm watching right now. So I actually added a little bit of cash to our portfolio to be able to buy on weekends. I'm very bullish generally on crypto right now, which I think is maybe a little surprising for people to hear, but I tend to get more bullish when we get into bear markets. When everyone else isn't. And why am I so bullish? It's really just because like the infrastructure of this whole ecosystem is now in a place where you have projects like Lighter that can build on Ethereum. That's really interesting. And I think it's bringing in higher quality founders to crypto. So I think the infrastructure is ready. We're seeing like stronger apps coming out, right? We've seen Hype, and we've seen things like Pump, and we're just seeing higher quality like apps being built. There's something called Derive that we've been watching. This is on-chain options, also built in the Ethereum ecosystem. So there's just higher quality stuff happening. The infrastructure is ready. The builders are ready. Regulation hopefully is coming. And then the other thing is, I love seeing this dispersion. Yes, it's harder as an investor, but we're seeing like the market clearly starting to understand token economics, and the projects that have a value accrual mechanism back to the token, like those projects are clearly starting to separate themselves. So we're focused on a lot of that. I think that's like an area I want exposure to. There's also like store value assets like Zcash and Bitcoin and ETH. I would put in that category as like another category. And then I have a view that the crypto markets are completely misunderstanding meme coins. And this is like a controversial
meme
topic.
Coins? What?
It gets into people's feelings when I bring up meme coins. But my sort of, and I think this is like, I try to be as just objective and level-headed on things. And I always try to say, you just observe the market. Don't be the market. Don't have like what I find when I talk to other investors about meme coins is they have a view on meme coins. They don't have a view on the market for meme coins. They have a view on meme coins themselves, which prevents them from seeing that lots of people like meme coins. And as a product, I just view it as one of the most successful things that the industry has shipped. But like people laugh at this.
I'm doing what you're saying.
Exactly. And this is why people are off sides on this.
Yeah.
How could that be if people didn't like using them, right? If you just think about it just as a product, it doesn't have to add value to the world. Does eating an ice cream add value to the world? Like does eating a bag of chips add value to the world? Just like there are plenty of successful things.
Ice cream probably does the same thing as meme coins when they go up in price.
Yeah, maybe. But this is kind of the approach that I take. I'm trying to just observe that market and say, why is Pump still doing $1 million of revenue a day? Why, like I don't have to judge these people. I can just say that's a sticky product. And so that's kind of my approach with kind of that segment of the market. So I'm sort of allocating to these 3 buckets, and we'll see how things shake out as this STRC thing plays out. I think this is a little overblown, and like Bitcoin probably was going to have some revisit these like potentially 60K anyway. We'll see. Mm-hmm. But yeah, exciting times, man. Like really, really exciting times for the markets.
Yeah. That's actually funny that you say that. I was actually kind of thinking, man, that the timing of Saylor's sell of 32 Bitcoin, it might be just completely coincidental that it was rolling over with Bitcoin.
It could be. Yeah.
Also, maybe you believe that there's no such thing as coincidences, but like you could see the Bitcoin chart and it has nothing to do with strategy. It is just a complete coincidence. I'll just leave that as food for thought for the listener. Mike, it's been great this week. Stretch is down 1.25% from when we started this episode. So we are going to continue to watch that and see what happens. You'll be back with Ryan next week, but then you've got me back the week after that because he's going on vacation again. So I'll see you very shortly, my dude.
Sounds great, man.
All right, that has been The Report. You can lose what you put in. This is not financial advice, all that good stuff. But we'll be back in a week to talk markets, Bitcoin, and see how deep of a shit Saylor's in then. Mike, it's been great.
Thanks, David.